Alright guys, exploring the Asian range. Okay, first of all, why should we be concerned about the Asian range? Well, frankly, number one, the Asian session typically should be well known to everyone by now that it is the least volatile in terms of all of the major sessions, Asian, London, and the New York sessions. Well, what do you think takes place during these quiet periods of the time? The smart money accumulates longs and shorts during consolidations, and typically Asia is in a consolidation. The markets as a whole, we as traders, we have to make money by price movement. In other words, price moving higher. If we bought, we stand to make a profit. If we sold short and the market moves lower, we stand to make a profit. That cannot and will not happen, and we cannot be paid until the banks allow the price levels to change. I understand the general consensus is that there's a supply and demand, okay, in the marketplace, and this is what moves the markets. But I'm here to tell you the real supply and demand factors are we as retail traders, we are the supply. The central banks, they demand our money, okay? And I don't mean that to be flippant, but that's just exactly how it works. If you don't believe me, at the end of all these series of videos, I think that you'll be convinced that this is in fact what really takes place, and it's a net sum zero game, and retails typically are the losers. Okay, so hopefully you're going to glean some insights from these videos as well as the ones I've already shared on the internet, and try to keep you out of that category of traders. The market, okay, will not move until the banks have established an initial base of counter trade positions. That means, and I use the analogy all the time, if you go to a casino, and you see what lines their floors, predominantly it's the jackpots, the little one-armed bandits, the slot machines. These little devils, okay, are their bread and butter. They typically will not pay out until a specific dollar amount is received, okay? For instance, for a payout of $1,000, they may require $3,500 to be deposited. Okay, I'm not using that as an example. I don't know exactly what dollar term it is. Okay, but I can assure you it's paid out on a ratio. They're not in business to lose money. Someone's always going to get paid. Someone always will hit a jackpot. Someone will always get the the cherry or whatever it is they get. I don't gamble. I don't do it, but I understand how the principle works. It's based on ratios. They take in enough, then they pay out enough. Okay, so that's what typically happens in the Asian range. The Asian session typically builds a counter trade base, okay, as the central banks and institutions offer up opportunities to get in long or short because the markets are in consolidation. Most novice traders, okay, are in this breakout mode mentality. They want to be buying a breakout or selling a breakout. And then you have the other category of traders that just simply think they're smarter than everyone else, and they buy within that range and expect to make profits based on whatever the stars are saying, if it's a full moon or whatever. I don't know. I'm being facetious now, but the bottom line is there is a large imbalance, okay, that takes place during the Asian range, okay, and the smart money is accumulating during that phase. They will not allow price to move far up or down within that time frame. Why would they do that? They're going to do this simply because they are going to allow trades to establish a base for them to build a counter trade position on. This module is not designed to go into all the intricacies about moving large blocks and flows within the interbank and central bank environment, but I think when you study the charts, you'll see this phenomenon repeats itself over and over again, enough to establish the belief in what I'm sharing with you. Okay, so once the central banks and institutional level traders, market makers allow positions to build, there will be an imbalance, and we'll learn more about that imbalance and what we can do with that later on. But for now, the trend of the day is established, based on what takes place during the Asian range. Okay, and the Asian range determines the directional bias and or likely direction of the majority of the London and or New York sessions. Okay, where the money is positioned in Asia dictates the profit release on the trading day. There's absolutely nothing else that drives the intraday market flow on the foreign exchange markets. So let's look at what this is all about in a greater detail. Okay, typically you'll have at 0000 GMT the new day in the Forex, right? You have the opening price. The market will start to meander throughout Asia, really essentially nowhere, just consolidating, moving sideways. Now this range could be any number of pips, okay, and we'll learn more about what we can do with that based on how many pips it is and vice versa. If it's a large amount of pips, it could indicate something else. If it's a small amount of pips, it could indicate something entirely different. We'll get into that in another module. That's not the focus here. At some point, you'll see a range established, okay? And don't be disheartened if you can't see the ranges right away, because it's really going to be a new concept to you if you haven't already done it. So the bottom line is you want to be focusing on the Asian range, simply looking for a consolidation or ranging environment. You don't want to be looking for the trends, okay? That's not what we're looking for, okay? The highlight move that we're really focusing on as this module is the fact that when we have a consolidation going on in the Asian range, it will be typically an establishment or an accumulation of smart money positions, okay? And what takes place after this is established? Well, by watching the 0000 GMT new start to the Forex day to 5 a.m. GMT, which is equivalent to midnight New York time, that's the window that I watch for. So I'm looking for the beginning of the day to midnight. I want to know what that range is. That range will indicate a huge amount of information for the ones that are aware that this phenomenon takes place. And I'm going to go out on a limb here and say about 98% of you guys that are relatively new to trading, and maybe if you've been trading for a short period of time, this has been eluding you all along, okay? And it's been in your charts. You haven't seen it. No one's talked about it, okay? But I'm sharing it with you now because it's exactly how the interbank market works. Now, going forward, if you're looking at this range, okay, the main focus on this module is within this range there is a particular entity, and then we collectively call it smart money. They are the know-it-alls. They know exactly what's going to unfold in the marketplace. They know what the range is going to provide them, an up day or a down day. Why? Because they're in control of the price fluctuations. It's not supply and demand, okay? They know where they want to make that price go up or down. And you can argue with me all you want, but the bottom line is that the charts state this. My accounts reflect this as a phenomenon that repeats itself. It's exploitable, okay? This is exactly how the markets are engineered. It is a casino. The bottom line, it's a casino. I've used this analogy so many times, and this is the heart of how the markets work. There has to be someone on the other side of their trade. They will not move price until it gets at least a minimum potential counter trade position base for their movement. They're in this business to make money, guys. Okay, they're not in business to give you opportunities to make money. They want your money. They want my money. They want it every single day. But they can't get everybody. But if you stay in the game long enough, they will get your money. Now, if you're smart enough and you control your risk and you control the amount of time that you trade and you target specific times of the day, like we've learned in previous videos, and you'll learn much more as we go beyond this module, by using this insight, knowing that during the Asian range, smart money, the banks themselves, okay, they are accumulating positions. You as a trader need to be studying this time of the day more so than trading it. This is another reason why I don't trade the Asian range the Asian session that much. It's typically, this is the reason why, because I'm watching what Asia's doing. Okay, it gives you all kinds of insights that we're going to learn when we cover the London Open session, and when we look at the intraday and short-term trading modules. This all will be revisited with a greater magnitude in terms of details and subtle nuances that we can use to get the insight that we need as off-floor or retail traders. We don't have the insight that the central banks have because they're communicating with one another. We don't have that. We have to look at the radar screen, okay, and see when there's that little blip that we're looking for that you'll learn all about later on. But for now, I need you to understand how to use this particular time of the day that sets the tone and trend, if it's going to be a trend at all, for the day. Everyone likes to get on these forums and they beat their chest and tout, oh, this is what smart money's doing. Okay, this is how smart money's doing this and that. Okay, well, I'm going to tell you right now, this is the absolute smart money tool that you're going to need. If you understand what goes on during this session, this right here will line your pockets more than any other concept or principle. Bottom line is, this is how the intermarket bank system works. They're in business to get your money, but they cannot move price to make their money until they get enough positions on the other side. Who do you think's taking the other side of your trade? It ain't the other guy in that forum sometimes. It's these banks themselves. They're going to give you the other side of that trade. Why? Because they know 5 hours later in London, it's going to be doing what they wanted to do. So have that in mind. And it's not meant to scare you, okay? This is the way it works, guys. And if you understand how the game runs, all you have to do is wait, let them tip their hand to you, and then you trade accordingly. All right? So let's look at some examples, and you can see more on how we can start fleecing the retail traders just like the banks do.
Okay, folks, let's look at some examples of some various pairs in the Forex market. And this is really not limited to Forex, it's really the concept that repeats itself every day in every market that is traded. But we're going to utilize the Asian session as our focal point for this module, and we're going to look at the Australian dollar Aussie USD pair. And these little boxes, well, not really boxes, these little short lines here, this is delineating the Asian range. That is 0000 GMT to midnight New York time, or 5 a.m. GMT time. And basically you just want to note that each day on your charts. And what you're going to discern from that is this is exactly where smart money is accumulating the positions for the daily range. Okay? You as a trader, you've basically sit down in front of your computer every day, probably more than you should, staring at the charts, hoping for something to jump off like a neon sign, saying, the day's going to be up or the day's going to be down. Well, what we're sharing in this module is absolute gold, and I want to get you focused on looking at how the markets are in accumulation phases before the actual market move unfolds. Okay, and we're going to look at that now. You see here this Asian range. Let's delineate some things about this. Okay, and what I'm going to do is I'm just going to highlight each Asian range just for the days that's displayed on this chart. I'm not going to do it for each individual pair that we're going to look at, but what I want to stress to you is I want you to notice what takes place from this point on throughout the rest of the day. In other words, if we look at the accumulation portion of the day, being during this time frame. Okay. Now, does it mean the move will always be contained within this period? No. But what it does indicate to you that the probability of the day's direction is going to be determined based on the trading within this segment of the day. Okay. And we're not going to do this one here, but again, we're looking at the Australian USD pair. And what I want to show you is that we have this day, there was accumulation on the long side. Market traded up for the day. Market came under some accumulation here, and it was essentially an up move day. Now, granted, I will tell you that yes, it closed lower, but we're looking for trades with momentum going one way or the other for the day. Okay, that's all this is going to indicate for now. We're going to build on this, and we're going to jump light years ahead of what majority of retail traders are able to do or discern in technical analysis with this information later on in later modules. But for now, it's important that you understand how to look at the market like this. Okay, we have a day essentially that is seek and destroy, and we have another day here where the market is under considerable accumulation and it takes off. Okay, so now we have the market is accumulating for longs, the market trades higher. Market accumulates longs, trades higher. Market accumulates longs, trades higher. You could have tried to catch some buy signals in here or sell signals, and you would have got chopped up. This is a day that you're going to eventually have as a trader. You're going to lose money. I'm not saying you could have lost or would have lost money in here, or that you would have made money on any of these days here. I'm just stating that over a course of approximately a week or so, this is how you can discern where the smart money is moving in the marketplace. And obviously, this one here is the all-star for the week, where the accumulation for the longs is seen, where it's a very nice trending day, and it closes near the high of the day. Now, what do you do with this information? Well, first of all, it's important that you understand what the Asian range does. It provides the accumulation phase for the entire trading day, and the range parameters high and low. Okay, we have to maintain a watchful eye of those levels. Okay, notice how the range here, if we extend that out into the day. Okay, so basically we're taking the Asian range high in here, drawing that out throughout the day. You should always do this, by the way. Always extend your Asian range high and low throughout the entire 24-hour period, because at some point in time later in the day, it could very easily trade back to that range level resistance or support and provide you an opportunity to trade. Okay, look what we have here. We have the Asian range accumulation phase. The market trades up, pulls back into, what time of day would this be considered? This would be the New York open time frame. Okay, well, we have the low in Asia, trades up through London back into New York. So how could we trade that? Well, we've looked at how we could trade the New York session, but using the low that's made in the Asian session, the high made in the London session, here's your optimal trade entry in here, risking 10 pips below here, getting in sync with the trade of the day, trend of the day rather, and you can catch yourself a nice, significant swing in price here. We're looking at, just for this example, if you're buying the sweet spot in here, getting out just at this old high, that's roughly 90 pips. There's nothing wrong with making 90 pips in one day. Okay, so that's one example of using the Asian range, waiting to determine if the market was under accumulation distribution for that day. All right. This day here, we're not going to look at this because I had some issues with gapping. We have this day here, the Asian range. Price eventually moves out, but never really comes back and trades to it. But there is something we'll learn about this type of event in later modules. but you can look for other opportunities to get long based on this movement here. There is the opportunity really to lose money on this day. We've covered this as a seek and destroy day where you just really either sell rallies and buy dips or stay out of the market, okay, because it's going to just try to pull back to the center of the range. The opportunity that was posed for traders here, notice that the lows here were taken out and then quickly vaulted vertically higher. If you look in other modules that you'll learn later on, this is simply a swing trade that you can utilize using old highs here. Okay, so the Asian range accumulated, found support at an important old high, and traded up. Where has the trend been? Market structure wise, it's been bullish. Okay, we're looking at a 15-minute chart. Okay, so while on the 15-minute time frame, this low would be considering breaking market flow lower, at the higher time frame, this trend would be still higher. So this would be an indication to get long. All right. So that's just looking at one pair. Let's look at a weird pair in my terms. I don't trade these exotic pairs, but look at the Swiss and Japanese yen pair. Okay, we have the same thing happening here. The Asian range, they accumulate short positions for the day, trades down. They accumulate short positions for the day, it trades down. They accumulate long positions, trades higher, accumulates really not really doesn't accumulate anything really. We got another seek and destroy or Z-day formation. You got really no trend whatsoever, and the same thing unfolds here. So you had opportunities to make 1, 2, 3 days making money, and then you have 2 days later on going into a new week here because this is a Sunday. So we have several opportunities to make some handsome pips there, allowing the market to tell us what it's doing in the Asian range. Here is another strange pair I don't trade. The British pound, Australian dollar. Market essentially is sideways. Accumulates some shorts, sells off, and in here they build some positions short, and then an economic report comes out and tries it lower. And my favorite pair, the cable. Market accumulates short positions in here, down day. Choppy Z day or seek and destroy, accumulates long positions, closes up on its day, accumulates short positions, closes down for the day, accumulates short positions, closes down for the day. So you can see during the Asian range, you can clearly see that the smart money, the participants that really make the market move, are placing their positions within this time frame, maybe a little bit after, maybe a little bit before, but generally this is when the direction of the day is predetermined by the banks, and you're not going to be able to beat that direction, and it's best for you to discern the tips and clues that they lay down for you, and they have to be able to do that because they move in such large quantities. They leave big footprints, and we're going to learn more about that later on. But I want you to look at how the market is really building positions for the day's trend during the Asian range. Okay, so you really got to be paying attention to your charts. Look at your time frames on 5 and 15-minute basis like this every day, and print charts out for the entire week. And then you also, it's very important to look at how previous Asian range highs and lows, okay, because these are really predetermined by banking institutions. The central banks set this pre-market high and low going into the new day for real reasons, okay, and we're going to learn more about that later on, but they have impact later on in the week, not just for that particular day. And I'll give you another example here. We'll use this Asian range low. If you just take that and drop it on your chart, you see any significance right here? Stopped it like a brick wall and down. Okay, you have all this Asian range high and low in here. We'll just look at the impact that using this high and this low, okay, if we just take that range and project it over here, you can see how we have highs and optimal trade entry to get short. Boom. So there was distribution going on within this realm of support and resistance. Now, I'm not referring to this as a zone. I'm just highlighting that there was a lot of consolidation in here. And then you want to nitpick your specific price levels within this range. And that would be here, this low here. So if we drop that horizontal line right there, you can see it essentially nails it right here. There you go. So you don't have to really be so fixated on where in this quote unquote support resistance or supply and demand zones there are specific price levels, and a zone, I guess you could be benefiting by looking at a particular range, okay, of price, but within that range there are specific price levels, as you can see clearly here. So don't be so hung up on trying to find zones to sell into and buy into. There's particular price levels that you need to be watching, and this is highlighting that here. Okay, so hopefully you've gleaned a little bit of insight on this module, and we're going to learn more clues and tips by the Smart Money on how we can use this particular time of the day to tell where we should be doing. We should be buying or selling for the day, and I think you're going to be impressed. With that, guys, I wish you good luck and good trading.